Okay, let's unpack this. Imagine, just for a second, a single entity moving a really jaw-dropping sum. We're talking over $200 million in, the traditional markets.
Right, a huge move.
Exactly. Now take that picture and shift it over to the wild, often unpredictable world of crypto.
Mm-hmm.
And specifically with a name, as iconic as Dogecoin, what kind of ripples does that send? What's the story behind that kind of move?
Yeah, what's really going on there?
That's exactly what we're diving into today, this massive Dogecoin DOGE transfer that really made waves, and what it tells us about the complex dynamics shaping crypto prices right now.
And our mission for this deep dive really is to cut through some of that noise, understand the push and pull of big money, the whales in the crypto space,
Right.
and decipher what this recent whale activity actually means for Dogecoin's price, where it might be heading, and crucially, uncover the key indicators that, savvy traders are watching very closely.
It's not just about one transaction, is it? It's a fascinating look at how these markets react and, what signals you, listening, can maybe learn to spot to stay informed.
Absolutely. It's about seeing the bigger picture from these kinds of events.
So that initial image, the massive transfer, it really sets the stage because that's where this Dogecoin story kicks off, this one gigantic move that had everyone, scrambling.
It certainly got attention.
Yeah, between August 24th and 25th, a major player, what the crypto world calls a whale, made an absolutely colossal move. They shifted an enormous 900 million DOGE, valued at over $200 million at the time, into Binance wallets.
And that destination, Binance, is key.
Definitely. This wasn't just pocket change, right? This kind of transfer, it immediately sparked pretty widespread fears of a broader sell-off.
Understandably so.
And true to form, we saw prices briefly dip. They went from around $0.25 to test that $1.23 support level, all on, significantly higher trading volumes.
It was a real moment of tension. The market definitely held its breath.
What truly stands out there is the raw psychological impact, isn't it? Seeing hundreds of millions move to an exchange like Binance.
Yeah, it's almost universally seen as a precursor to selling. It's like a huge tanker. Pulling into port, it signals an intent to offload, or at least get ready to.
Makes sense.
So the market's reaction, that quick dip, testing the $1.23 support, it perfectly underlines the perceived threat of that move. In crypto, these big centralized movements are critical indicators.
Because they could flood the market.
Exactly. They have the potential to just swamp the market with supply, hitting short-term prices hard. It's a very sort of human reaction, that fear of dilution playing out in the digital space.
Okay, so just when you think you've got it figured out, right? Big transfer, fear, prices dip.
No.
The data throws a complete curveball. This next layer just changes the whole story. It injects this fascinating contradiction.
Okay, I'm intrigued. What did the data show?
Well, despite that massive transfer to Binance suggesting a sell-off, on-chain data, which, tracks every single transaction on the blockchain, giving this amazing transparency.
Yeah, it lets you see what's really happening in the wallets.
Right. It actually revealed a completely different trend. Throughout August, whales, not just one, but a group of large holders, actually accumulated a significant amount, 680 million DOGE.
Wow, okay. So buying, not just selling prep.
Exactly. So we've got this fascinating tug of war happening, a battle between distribution, the selling, and accumulation, the buying, from these very same large holders. It's much more complex.
Right. And putting that in context, it tells us that, while yes, some big players might be looking to offload, others are clearly seeing value. They're actively buying.
So a split opinion among the whales.
Sort of.
Yeah.
This push and pull is critical. It suggests there's real underlying demand, strong enough to absorb significant selling pressure, even from that one dramatic transfer.
And that's where on-chain data is so powerful.
Absolutely. It lets us peer into the wallets, get a much more complete picture of their long-term game, rather than just reacting to single, flashy moves.
So the real insight is maybe Dogecoin is changing.
Well, you could argue you're seeing the market trying to move beyond Dogecoin being just a meme coin, driven purely by sentiment. It looks like some sophisticated investors are treating it with a bit more strategic conviction, accumulating on dips, almost like smart money positioning.
Interesting. So with these opposing forces, the big scary transfer versus the quiet accumulation, where did the price actually end up?
Yeah, what was the net result on the chart?
Surprisingly, maybe, given the standoff, it's been trading in a remarkably tight range, like a $0 A01 range, which is only about 3% fluctuation, holding steady right around $0.22 from August 27th to 28th.
Very tight. Consolidation.
But here's where it gets even more compelling. We saw this peak in, get this, institutional participation at 8 p.m. GMT on August 27th.
Yeah.
During that single hour, DOGE went from 0.224 cents on astounding volume, 1.26 billion DOGE traded.
1.26 billion in an hour.
Yeah. That's nearly 4 times the usual hourly amount. It really makes you wonder, what kind of serious money is stepping in like that?
That definitely raises an important question. I mean, what does a tight trading range like that usually signal? It often points to consolidation, right? Like the market's catching its breath.
Yeah, buyers and sellers in a stalemate.
Exactly, waiting for some kind of catalyst. And that spike, the 1.26 billion volume pushing the price up, that's a very strong signal. It's not just volume, it's concentrated, likely professional buying.
Significant accumulation interest, you called it.
Right. From large, typically more sophisticated players. It's not just retail hype moving the needle there. Serious money, maybe treasury desks, institutional funds, they were actively buying at those levels.
And that strengthens the floor.
It certainly can. That kind of buying can establish a much stronger support level for the asset. It suggests a deeper conviction, something beyond just short-term speculation, almost like these players see real value there.
Okay, so for people trying to, predict the next move or just understand what's bubbling under the surface, what are the charts telling us right now? Any signals about which way this tension might break?
Well, what's critical is how these forces have basically carved out some distinct technical levels. We've identified strong bid interest, buyers lining up right around 0.211 times to 0.22 times.
Okay, the new floor.
That range has pretty firmly established itself as the new support level, yeah. Especially after that whale transfer and the consolidation that followed.
And in the ceiling.
On the flip side, the price has repeatedly tried and failed to decisively break above 0.224 to 2.224 to 22 cents. That's acting as a pretty stubborn resistance level, capping the short-term rallies.
So bounces off that level.
Yeah, we've seen multiple attempts, but sellers seem to step in each time to defend it. Now, looking at momentum, the Relative Strength Index, the RSI, it's sitting steady in the mid-50s, which, for those who follow technicals, is pretty much classic equilibrium. It's not overbought, not oversold. Balanced? Yeah, but don't let that fool you. While it shows balance, it also means there's significant room for a move in either direction before hitting those extreme conditions. Think of it like a spring loading up, energy building.
Okay.
And we also need to remember, while we saw that big institutional spike, the overall activity in other periods has been declining slightly, which points back to this consolidation.
Right.
This tight range is often called a compression phase. Volatility is low, but pressure is building. And its eventual resolution breaking resistance or falling below support could really set the stage for a strong directional breakout. That'd be the next big chapter.
Okay, so we've got this really interesting picture on the spot market. Clear consolidation, support, resistance, that institutional footprint. But often the futures market and, the wider economic winds can tell an even bigger story. They can act as powerful tailwinds or unexpected headwinds, really.
Absolutely. You can't look at these things in isolation.
So how are those larger forces reacting to the current Dogecoin dynamic?
Well, zooming out a bit, what's quite interesting is that futures positioning has actually weakened somewhat. Open interest, there's the total number of outstanding futures contracts.
Right, the open bets.
Yeah, exactly. That slid by about 8% after that initial whale transfer we talked about.
Okay, what does that tell us?
It indicates lighter positioning. Fewer traders are betting with leverage. Now, short term, that reduces volatility, which fits with the tight range we're seeing. But it also kind of tempers the breakout conviction. It suggests less speculative excitement in the derivatives market, like maybe the pros are waiting on the sidelines for more clarity before committing big leveraged bets.
Gotcha. And the macro picture, the broader economy.
Yeah, can't forget that. Meme coin sentiment, and Dogecoin is definitely still part of that, remains heavily tied to macro signals. We saw a perfect example recently with Fed Chair Powell's remarks at Jackson Hole.
Yes, that caused a ripple.
It did. Those comments, hinting at broader economic policy, they fueled a temporary sector-wide rally across crypto, including the meme coins.
So macro can just override everything else.
Often, yeah. These broader indicators, inflation, interest rates, global events, they create the weather, so to speak. They can easily override specific asset news or individual whale moves. So keeping an eye on the macro landscape is absolutely crucial.
Okay, that makes sense. So wrapping this up a bit, if you're watching Dogecoin or maybe just curious about how these markets tick, what's the playbook, What are the key things to keep an eye on now?
Right. For traders or just informed observers, there are several critical points. First, obviously, is the resilience of that 1.21 times support level.
Does it hold?
Exactly. Does it hold up against any more potential whale distribution? If it breaks decisively, that's a significant bearish signal.
And the upside?
Conversely, a solid breakout above that 0.2225 resistance, that would be a major trigger. Could ignite a rally towards 23 cents, maybe even to 24 cents. It signals a shift in the balance.
Okay, levels are key. What else?
Beyond those immediate levels, we're also looking for signs of sustained corporate or institutional accumulation around 22 cents. Our treasury desks, larger funds, continuing to quietly buy in that zone.
What would that indicate?
That would suggest deeper, long-term positioning, real confidence, not just short-term plays, like they're getting set ahead of maybe broader market catalysts.
And finally,
keep an eye on renewed leverage in the futures markets. If that open interest starts climbing again, it could amplify Dogecoin's next move, whichever way it goes. It signals rising confidence or maybe just rising speculation again.
so those are the main signposts.
Those are the key things smart money is watching right now, yes.
Yeah.
They'll tell us whether this compression resolves up or down and with what kind of force.
We've definitely explored a really fascinating dynamic here with Dogecoin. You've got this huge whale transfer spurring fear, but at the same time, it's balanced by this ongoing quieter accumulation from other big players, all leading to this remarkably tight trading range.
A real standoff.
Yeah, the market's in this delicate, almost coiling balance. Key support and resistance levels are holding for now, and traders are just carefully watching for that next catalyst.
Waiting for the break.
So ultimately, what this Dogecoin deep dive really shows is that even in this supposedly decentralized world, the concentrated power of a few whales can still absolutely dictate short-term sentiment and create some serious turbulence.
It's undeniable, their impact.
But maybe the real lesson for you, the listener, isn't just about tracking every single whale move.
Yeah.
It's perhaps about understanding how their conflicting long-term strategies, that distribution versus the accumulation we talked about, how that ultimately shapes the very definition and maybe the future of these digital assets, pushing them beyond just being memes into something potentially more, I don't know, structured, strategically valued.
An evolution, potentially.
Right. It really leaves you to consider, is Dogecoin truly trying to shed its purely speculative skin? And if it is, what does that actually mean for its place in the whole evolving landscape of digital finance? Something to think about.